So I'm going to teach you exactly how to trade like institutions and how you can look at ES and NQ in order to predict where price is going by seeing fake moves in one asset and the real move in the other one, and then position yourself tactically in order to capitalize on that lagging asset and predicting where price is going to go before it happens, before it gives you that indication. I'm going to just showcase an example quickly just to prove how well this works. This is the CPI candle. So we spike to the upside, and let's see what these correlating assets actually do. So they're moving pretty similar, but ES has this large leg down, so we know that this is a lower high. So we can see that we form a lower high here, and it gives us an indication that we're probably about to move down, while NQ is lagging and it's the same time, but we don't know if this is a lower high yet, but we know that it's a lower high on ES because of this move. So that gives us an indication that we're probably going to go lower on NQ as well. But if we would just look at NQ, we wouldn't know that, but ES gives us that confirmation that this is a lower protected high, and then this should also be a protected high on NQ. So then we drop down to the 1 minute time frame, and we always look for some sort of confirmation. So we have this change in state of delivery here. We see that we close below, that's nice, and we have this fair value gap as well. I would just take an entry like here, because this is interesting. And put the stop above the protected high, and just target a drawn liquidity, preferably this one, because this is nice, but we have this wick. I don't like this wick, so I just target the body here. That's the thing. And just let us see what price does. Like, it's so simple, guys. It's so simple. Like, you get those 5.87 R in 3 minutes, guys. 3 minutes. Why? Because we just see that the market has formed this protected high, and ES gives us clarity before we see it in NQ. So you just take that entry, put the stop here, bam. Like, this is so simple stuff. So let me show you another example just to prove that this strategy works really well. New York session opens, we get this week. Take out people who went short here, and we can see what happens in ES as well. Nothing happens. Really weak. ES is really weak today. No highs taken out. Really weak. That indicates that we're not really bullish. Yet we have this SMT as well. So NQ is just faking us today. So now we have this protected high. Obviously, you can see our price reacted. Then again, you want to look for that change in state of delivery, which would be at around this point. Just wait. Whoa, that's aggressive. Then just wait. We close below. Then we have confirmation of that the market is probably going lower. Then you want to enter on the change in state of delivery. And this is interesting. If you wonder where to put your stop loss, then look at this large 1 minute wick. Put it at 50% of the wick, because that should be protected. And you want to be targeting some opposing liquidity, drawn liquidity, which is here, really obvious. That's a 1 to 2. You don't have to be too aggressive with this strategy, just something simple as this. So let's see. We got filled, it went down really quick, really easy. Now I'm going to explain quickly how the strategy works, and it's really simple. You have two correlating assets, which is ES and NQ. Sorry for my painting, but you get the point. We have ES and we have NQ. Let's go. So let's say they're moving in sync. Let's say ES makes a higher high, higher low, higher high, higher low. NQ does the same. Higher high, higher low, higher high, higher low. And then we get into New York session and ES fails to make a higher high. It just goes like this and it starts to go lower. While NQ makes a higher high and then it starts to go a bit lower. Then this is an SMT from here to here and from here to here. You see the difference. That means one of them is lying. And usually this is a sign that smart money, because they're not always trading the same assets all the time. They're switching around from asset to asset. That this is probably retail getting that last push in, but smart money has already exited the position long ago. And as you can see here on ES, it's not pushing higher. That means it's probably a fake out on NQ or retail getting one last push in, but it's probably not going higher. So what you want to be doing is you want to be targeting lower. You want to look for a bearish position, even though we have that higher high, because you can see the pattern here. You're quicker than everyone else because you see the lag. It's a lagging indicator and you're coming in and capitalizing. So then you want to go into NQ on the lower time frame. Let's see the 1 minute time frame. And you know that this last high is a protected high. So you want to put your stop loss here. On the 1 minute, you get that change instead of delivery, let's say here. And probably a fair value gap, but that's not necessary. But you get that change instead of delivery and this protected high. Then you want to go and enter on the change instead of delivery. That means the last up close candle where it starts, that's your entry and your stop loss is here. And then you want to target lower and you want to target some opposing drawn liquidity. That's basically the strategy. It's really simple, yet it works every single time. That's really simple. It gives you so much clarity, because a lot of the reasons why people never follow their trading plan is because it's not clearly defined. They don't trust it. It doesn't give them good setups again and again and again. Because if you have a really good strategy and a trading plan that works and gives you money every single week, why would you not use that plan? It doesn't make sense. So the issue that a lot of people have is that they look at a strategy like this and they think, oh my God, this strategy is so nice. Now I've cracked the code to the markets and I'm going to print so much money. But the thing is, you won't. Let me get focused here. It's so bright. Damn. So the thing is, why is it so light? Damn. But the thing is, you won't. And the reason why is because at this point, you get excited, you get that dopamine and you think about, now I've cracked the code to the market, I'm going to make so much profits, and you won't. Think about how many new strategies you've developed over the years. And every single time you find a new strategy, you think this is it. This is the holy grail. Now I'm going to make so much profit, bro. Like I'm going to get so much out of this market, and you don't. Like you always have to develop yourself. You always have to study every single time. Like this strategy is just one of many strategies you can use in the market, and don't get too excited. Don't get too attached to this strategy. Always learn something new. Always remain a student of the market. Just try to backtest this strategy for yourself. Try to develop yourself, but this strategy is not going to change your life. Like just keep learning and don't put any strategy on a pedestal in itself.